Hello, I'm Rhonda Porter here with your weekly episode of The Mortgage Porter, September 8th, 2025. August job growth came in below expectations with only 22,000 jobs added compared to the 75,000 forecasted. June and July numbers were also revised down by a combined 21,000, including a loss of 13,000 jobs in June. This is marking the first monthly decline since December of 2020. So the unemployment rate edged up from 4.2 to 4.3%. And this jobs report really did catch markets off guard on Friday and causing mortgage rates to improve. Because of the jobs report, current odds are 100% that the Fed will drop the funds rate next week on the 17th, with a quarter point drop at just over odds of 90% and a half point at almost 10%. Opno Blue shows that mortgage rates as of last Friday, September 5th, averaged about 6.322% for a 30-year fix. Now, please remember this Opno Blue index is an average from about 35% of mortgage transactions or lenders who use Opno Blue when they go in to lock in a mortgage rate. And so we don't know how many points are being used to price out these rates, if any, what somebody's credit scores are, or how much down payment they have, and all the many different factors that go into pricing a mortgage rate. So if you'd like a mortgage rate that's current and based off of your personal financial scenario, please reach out to me. I'm happy to help you with that. We have inflation data this week with the producer price index on Wednesday, followed by the consumer price index on Thursday. On Tuesday, we have the QCEW annual revision data from the BLS jobs report, which is being estimated to add or actually subtract 800,000 to 1 million additional less jobs from the first quarter of 2024 to the first quarter of 2025. And so these revisions are on top of the jobs report and the revisions that we currently have. And so this is a significant adjustment to the actual jobs reporting for our economy. So it'll be interesting to see what's reported tomorrow. And it's around 9:45 a.m. Seattle time as I prepare this for you. And the markets are up about 15 basis points for mortgage-backed securities, and the Dow is down about 16. You can see how the nice grain candlesticks that we have there are trending higher, which means that we have lower mortgage rates. For this week's In the Spotlight, I want to address a mortgage myth that if you are thinking about refinancing with these lower rates, that you need to wait until a rate goes down a full point before it makes sense to refinance. And so this chart shows you the estimated savings based on the loan amount being refinanced, what 1% drop in rate could mean for you. So, and with a refi, if you have a escrow reserve account that's taking your taxes and insurance every month, it is refunded to you from the current mortgage servicer a couple of weeks after closing too. So markets are already pricing in the Fed rate cut, and so it's not expected to have rates go that much lower after the Fed cuts rates. In fact, rates could actually go higher too. So if you are thinking about refinancing, it's best to at least talk to your mortgage professional. Don't wait till next week with the Fed to look at potentially refinancing. And I am happy to help you with that, of course. And if you're thinking about buying, selling, refinancing, remodeling your home, restructuring your debt, or reverse mortgage, I am happy to help you. Even if it's months away, you cannot start too soon with the mortgage process. We can work on a budget, review your credit. I'm here to help you or anyone that you know with your mortgage needs. And hey, please check out my blog, The Mortgage Porter, and subscribe and to get weekly updates. So take care. I hope you have a great week, and I'll talk to you soon. Bye-bye.